if I go to the weekly, you see how it's trying to bounce from the top of the volume profile. And if I draw, if I have to draw my Fibonacci price retracement from the top to the bottom, again, I don't use Fibonacci's because I have enough indicators to depend on. Okay, look, it's 62% retracement, which is basically the golden formula. Let me remove my Fibonacci's now so you can see, and let me draw a line here. Okay, this is my line
SPX 500,
and it is giving me the note as well, and the line, in fact, this has to be a little bit higher right here. So let's go back to the daily, see how it's touching the same level, same idea. 1 day, the difference between daily and 1 day profile is that the daily here is historic data, 1 day is intraday. And if you see, there's a chance for the ES to go back one more time, maybe to touch this power line. And if I draw my Fibonacci's from here, all the way to the bottom, the 62% yet to touch. Again, regardless, the whole zone is a retracement zone. Same thing with the Dow. If I look at the Dow, see how on the weekly chart, how the Dow behaved. Same exact idea, right? 1 day, see how it touched the 62%, coming back down, facing some, sorry, always change to pointer to avoid drawing tools to plot again. Again, look at this, it's facing some support resistance at the bottom here. If it breaks it, it can come back lower. Let's examine the silver, the gold. Silver support, see it's touching the support again, right?
August,
And if I look at my 60-minute chart, there was a ton of indicators showing support, including the DRLs, gold. So gold, although it touched this area multiple times here, it still bounced. If you look at the 60-minute, so here's the thing, the USD CAD, maybe here it bounced from the bottom of the area using this SAL level. See that? Here's the idea, folks. Once you have your volume profile perfected and established on your charts, the rest is basically just matching your indicators and confirming. So having volume profile, especially the one we created, which is very dynamic, very efficient, it's important. That being said, you know, uh, you can ignore many indicators that will fall into zones that are not true reversals to avoid stop loss, to avoid bad trades. And of course, the level held. This is the SPX 500 from the previous days. It held a few days. It was just back and forth in the area, as you notice here. But eventually, it started breaking down today for more profits if you grab the short. Furthermore, as I mentioned earlier, you had confirmations for this trade. Some included different indicators such as these two power lines on the 1 day profile. On the 60-minute chart, we had a number of DRLs, dynamic reversal levels. So this was a good long-term strategy for trading the E-mini S&P or the SPX 500 as a CFD.